Hi, it is Tuesday morning, 23th of July, and it is 8 a.m. in New York. This channel is Drips Media, and I will be covering financial news from New York stock exchanges before markets open. The regular trading for the U.S. stock market opens at 9:30 a.m. My name is Daniela Drips. I will be quickly covering yesterday's closing data, main indexes, and the key companies. Please follow us online.
Good morning. This is Drips Media, lid from New York. Drips Media, the revolutionary digital service that transforms the way you stay informed. With Drips Media, you get real-time news delivered in dynamic short video clips, keeping you updated on the latest headlines as they happen. Our cutting-edge technology curates and condenses top stories. Whether you're on the go or just need a quick update, Drips News ensures you're always in the know, effortlessly. Stay connected, stay informed, and experience news like never before with Drips News.
All three major indices ended the trading day in positive territory, bouncing back from recent losses. The S&P 500 led the way, gaining 1.1% and erasing the losses from its three-day losing streak. The tech-heavy NASDAQ also saw a significant rebound, closing 1.6% higher and similarly reversing its three-day decline. The Dow Jones Industrial Average, meanwhile, posted a more modest gain of 0.3%, snapping its two-day losing streak. Despite the positive finish, the Dow remains down for the week. These gains suggest investors are shaking off some of the recent pessimism that had gripped the market. However, it remains to be seen whether this positive momentum can be sustained in the coming days and weeks. Now let's delve into the performance of some tech giants. Apple saw a slight dip yesterday, with its shares closing down 0.2% at $223.90. This ends a one-day winning streak for the tech giant. On the other hand, Google's parent company, Alphabet, had a strong showing, with its shares surging 2.3% to close at $181.70. This impressive performance snaps a four-day losing streak for Google. Microsoft also enjoyed a positive day, with its shares closing 1.3% higher at $442.90. This marks a turnaround for the software giant, reversing 4 consecutive days of losses. The performance of these tech heavyweights suggests a potential return of investor confidence in the sector. However, it's crucial to remember that yesterday's gains come after a period of volatility, and it remains to be seen if this positive momentum can be sustained in the long run. Turning our attention to Amazon, the e-commerce giant saw its shares climb 1.8% yesterday to close at $148.20. This positive performance brings an end to Amazon's four-day losing streak. Looking at the bigger picture, Amazon's stock has experienced a 6.3% increase in value since the beginning of the month. However, over the past 5 days, the company's shares have taken a 4.5% dip. Despite this recent dip, Amazon's stock has seen a 17% increase since the start of the year. It's worth noting that Amazon's stock has experienced some volatility over the past 10 days, with 5 days of gains and 5 days of losses. This suggests that investor sentiment towards the company remains somewhat uncertain. NVIDIA, a major player in the chip manufacturing industry, saw its shares jump by 4.8% yesterday, closing at $123.50. This positive performance helped NVIDIA to reverse its previous day's losses. Meanwhile, Tesla, the electric vehicle maker, experienced a significant surge in its stock price, closing 5.2% higher at $251.50. This impressive gain allowed Tesla to break its one-day losing streak. Finally, let's look at Amazon. The e-commerce giant saw its shares slip by 0.3% yesterday, closing at $182.60. This decline marks the fourth consecutive day of losses for Amazon. Despite this recent dip, Nvidia's stock has shown remarkable resilience since the start of the year, boasting a 149% increase. This impressive year-to-date performance underscores the company's strong position in the market. However, looking at the past 10 trading days, Nvidia's stock performance paints a more mixed picture, with 4 days of gains and 6 days of losses. This suggests some volatility and potentially a degree of uncertainty among investors regarding the company's short-term prospects. Overall, yesterday's market performance suggests a potential shift in sentiment, with investors showing renewed interest in certain tech giants. However, the mixed performance of some companies, coupled with recent volatility, indicates that the road ahead may not be entirely smooth. It remains to be seen whether this nascent positive momentum can be sustained in the face of ongoing economic uncertainties and potential headwinds. Let's shift gears now and examine the financial sector, which presented a mixed bag yesterday. American Express outperformed its peers, closing at $244.80, a 1% increase that reversed 2 consecutive days of losses. Similarly, JP Morgan managed to break its 2-day losing streak, edging up by 0.2% to finish at $210.30. MasterCard and Visa both saw gains, rising 1% and 0.9% respectively, to close at $447.90 and $267.70. Both payment processing giants were able to reverse 2 days of losses. Morgan Stanley also joined the rebound, closing 0.3% higher at $102.40, snapping a 2-day losing streak. However, it wasn't all rosy in the financial sector. Bank of America continued its downward trend, slipping 1.4% to close at $42.30. This marks the 4th consecutive day of losses for the banking giant, suggesting potential underlying concerns that investors are monitoring closely. Goldman Sachs also struggled, with its shares falling 0.8% to end the day at $341.50. This decline extends the investment bank's losing streak to 3 consecutive days. Citigroup shared a similar fate, closing down 0.5% at $54.70, marking its 3rd straight day of losses. Despite the mixed performance within the sector, the financial sector overall remains up for the year, reflecting a degree of resilience. However, the recent losses in major players like Bank of America, Goldman Sachs, and Citigroup suggest some investor apprehension, potentially linked to broader economic uncertainties or sector-specific concerns. It will be crucial to watch these financial giants closely in the coming days to determine if these losses are temporary setbacks or indicative of a larger trend. Now let's take a look at the cryptocurrency market, which experienced a downturn yesterday. Bitcoin, the world's largest cryptocurrency by market cap, fell 2.1% to close at $66,723. This decline halted a 3-day winning streak for Bitcoin. Dogecoin, often referred to as a meme coin, also took a hit, plummeting 3.9% to close at 10 cents. This downturn ended a 3-day period of gains for the cryptocurrency. Ethereum, the second largest cryptocurrency, wasn't immune to the sell-off either. It dropped 2.6% to finish the trading day at $3,444.30, snapping a four-day winning streak. Yesterday's performance in the cryptocurrency market suggests a possible cooling off after a period of relative strength. The reasons behind this pullback are complex and could be attributed to a variety of factors, including profit-taking after recent gains, broader market uncertainty, or evolving regulatory landscapes. It remains to be seen whether this is a temporary blip or the start of a more sustained downward trend in the volatile world of cryptocurrencies. Bitcoin, the world's largest cryptocurrency by market cap, fell 2.2% to close at $66,647.80. This decline halted a three-day winning streak for Bitcoin. Despite this recent dip, Bitcoin has gained 3.9% over the past 5 days and is up 6.3% for the month. Since the start of the year, Bitcoin has seen an impressive 58% surge. Looking at Bitcoin's performance over the past 10 trading days, we see a mixed picture with 6 days of gains and 4 days of losses. This suggests some volatility and potentially a degree of uncertainty among investors.